Hello, and welcome back to Happy Time, Happy Money podcast. And I'm your host, Victoria Miracle. Today, we have our guest, Joshua Scigala. Joshua is a crypto veteran and the co-founder of Vaultoro, the answer to collapse of the biggest Bitcoin exchange in 2014, which filed for bankruptcy and lost its investors over 450 million. Losing his investment in the collapse, Vaultoro was born in 2015, building the first Bitcoin gold exchange to offer a fully transparent trading platform that protects people's assets in physical gold bullion. Those days, Joshua is also working on solving inflation by working on a new stablecoin protocol called the Standard DAO. The standard that will enable people to generate stable coins fetched not to fiat, but collateralized by gold, bullion, Bitcoin, and ethereum.
We can explain what that means.
And it's like so small, but I made it through. Hi and welcome, Joshua.
Hi, Victoria. It's a pleasure to be here.
It's a pleasure to speak such a veteran in the crypto industry. As we're like, so many of us are just a year, 2, 3, but it's so I'm so eager to learn from you and for you to share what you know about it, everything. But before that, I would love to dive deeper more in you and your story on how you started, why it was so interesting for you in 2014, and how the whole thing happened for you.
Well, yeah, I mean, actually it was late 2010 when I first heard about it. And it came across my paper because I was trying to solve the similar problems already in a site that I had back in early 2000s, just after 2002, around about then. I was working on a site, the first site where people could swap clothes, mainly women could swap clothes. So I was always fascinated with alternative economies. And as this swapping site came out, I realized swapping is a really terrible way of doing commerce, because if my wife really loves that jacket of yours, Victoria, but you look through her wardrobe and you're like, I don't like anything you have, then the deal falls through. So, but there's a whole marketplace, right? So my wife might like your thing, but maybe she could give you then a token or a credit, and you could then use that in other places. So we're back full circle to money. And so I was already looking at how to have digital currency during that time, and I found what the cypherpunks were doing, and they were the ones that were inventing all the building blocks that became Bitcoin. And they were in this small little nook of the internet, which is weird and crazy, full of mathematicians and cryptographers. And they couldn't solve the single problem, which was, how do you have digital scarcity? How do you solve the double spend problem? And so the double spend problem is like, basically, if I send you an MP3, I don't know, you're going to make a copy of it and then send it back to me? Like, that's just weird in the digital space, right? You're like, no, of course not. You just send it and you have a copy, Victoria has a copy, it's fine. But to have true money, you need to solve that problem where when I send you an MP3, I don't have it anymore. And you absolutely know that I don't have it anymore. But instead of an MP3, it's some money. and so I thought, oh, it's an unsolvable problem. I'll give up. I'll work on some other stuff. But I kept my ear to the train track, listening for sounds that maybe someone's solving it. And then, in late 2010, the white paper came across my table, and I thought, my God, she solved the problem. Here it is. This is it. Satoshi Nakamoto discovered the holy grail of a digital currency, and not just digital currency, because most money is already digital, but a decentralized digital currency, a way of having money, rare digital assets that can't be copied, but that isn't part of the state, isn't generated by a government or a corporation. So for the first time, we have the separation of money and state. And this is a huge philosophical advancement. Just like we had the separation of church and state, this was a big move forward in just human philosophy that I felt the same way about this. And yeah, I've been diving down that rabbit hole ever since then, and I'm working on. Hello, Victoria. I think you're.
Yeah, I was a little frozen, but nobody cares because they don't see it. It's okay. Cool. I can hear you for sure. Yeah, I froze my internet a little bit. But so that is interesting because it's all like came out from, again, problem solution, right? The whole thing's about problem solution, and he created beautiful solution for people that is starting to come across. And how did you started why did you choose gold and, in the Bitcoin? Like why is that combination?
Yeah, so what most people don't understand is that when you put money in a bank, it's not your money anymore. It now legally belongs to the bank. That's why you're a creditor. You're giving the money and they promise to pay you back. And most of the time that works out. Most of the time that's great. You go to the ATM and the money comes out, right? But as we saw in 2008, sometimes you have issues, and people on, like in Greece, they all of a sudden they couldn't take money out of the bank. And we will see this happen again and again and again because it's happened over and over again in history. So when in the very first Bitcoin exchange was called Mt. Gox, and it was a very sort of, tacked together exchange that someone built. We were just a weird little community that didn't really know what we were doing back then. We just thought, wow, we're revolutionaries in the cryptos in this space, and we're going to take over central banks. But this exchange, Mt. Gox, was the very first exchange, and it really it wasn't transparent, so nobody knew how many. So when you send your Bitcoin in, is it still there? Has it been hacked? We don't know. It's just the same thing as a bank. You go to click withdrawal and your Bitcoins come out, until one day they didn't. They stopped coming out. And so when that happened, and it was like, I've forgotten how many, it was a lot. It was near 1 million Bitcoin or something like that, which was in this exchange, which is in, the multiple of billions of dollars now. And so my first, and this was actually part of a string of different centralized services that were just running off with people's money or were being hacked. And I got really mad at that because it was like, man, you guys are ruining this total revolution that's happening. We don't need to stand in front of Wall Street and go, Occupy Wall Street. Like, you don't need to beg for change. You just build something better and leave the old thing to be obsolete. And that's how you have true change. And here we have this thing that's truly change in the world. And these greedy people are just screwing it up for everyone, because at the time you'd see headlines like, the CEO of Bitcoin runs off with everybody's money, because the media didn't even understand Bitcoin at that stage. And so I was like, this is enough. I'm going to build an exchange that is ultimately transparent, where people could always check the assets, because the blockchain is transparent. And I can talk about what the blockchain is later, but we then worked on how do we make an exchange that is also backed by another rare asset rather than using fiat. So when Mt. Gox collapsed, a lot of people also had US dollars on that exchange, but because they had US dollars, that is actually on the books of the exchange. So that meant liquidators came in, they took it all for themselves, and the liquidators and the lawyers have been gobbling up and having, eating on those funds since 2013, 14. So what you want to do is gold is a good, right? It's like a car or a couch or anything else. You can have what's called a bailment contract, which means that this gold belongs to you, but I look after it. So I look after it in this high security vaulting facility. And not just that, a bank account is only insured to $100,000 euros here. I think it's $250 in America. Gold can be insured to however much you've got, because it's a physical good. If you've got $16 million worth of gold, you can insure that 16 million worth of gold, and you can properly audit it. You can count it. Whereas if you have money in a bank, you don't know what the bank's doing with that money. What are they double? They've bought this and weird instruments over here, and they're in fractional reserve, which means they have only a tiny amount of money compared to how much they owe. And there's all these funny business with banks. So it's a really simple model. You come in with Bitcoin, you trade it for gold, and then when Bitcoin drops in value, you buy back Bitcoin, and you trade between the physical thing that sits in a high security vaulting facility in Switzerland, Zurich. You know, it's a great gold country. It's been through 2 world wars and stayed fairly neutral. So, so yeah, that's where that came from. And yeah, we've been going ever since.
Wow, that's amazing. I love it. I love that you're solving, you know, that also kind of volatility problem, because if you see like things going down, you can like move your assets to your gold and you feel more secure, right? We all know gold, we all feel more secure. I mean, nothing is secure, but it does give us the safety feeling because we know it. And
yeah, well, you can't print gold out of nowhere, you know.
Yeah, exactly. And you know, you also touched on, right, when you were sharing that the magazine was saying, oh, the CEO of Bitcoin, right, but it's decentralized, there's no CEO. And let's dive into more of like what is it, what does it mean, what is a blockchain, and what does it mean decentralized?
Yeah, so a blockchain, if you think of a ledger, you know, a ledger is a book, and you write in transactions that might have happened, right? And all a blockchain is a public ledger that everybody can write in, and every 10 minutes that ledger closes, and a new one opens up, and the first line of the new ledger is the number of this ledger, basically. The hash of this ledger. Mm-hmm. And so every 10 minutes there's a new hash, and a hash function is a mathematical process. It's a one-way mathematical function. What that means is that, imagine you have a box, and you can stick anything in this box. Let's say a Word document, and out the other end will come a string of 124 characters, random gobbledygook. But it's unique to this Word document. If you change one full stop to a comma and put it through that box again, a whole different string will come out. So why that's useful is that you can, in 10 years' time, let's say you have that document and you need to go to court, you can, if the court's got the original hash, you can hash it again through the same box and go, look, I have never changed this document because the exact same hash came out. And it's a one-way function because you can't take that string of numbers, put it the other way and recreate the document. That doesn't work. So, and it's a funny function because you can stick the Library of Congress, like the whole, so much data through the same box, and you still only get a 124 character string out. I know this is going a bit deep dive there for your audience, but what that means is that to create that hash, that fingerprint basically of that document, there needs to be some computation. And so the blockchain works with a lot of computation. A lot of your users would have heard of mining, and that's what that is. It's computing those hashes. And basically what you're doing is taking that book, that ledger, you're hashing what's in that book, and you're taking that hash and putting it as the first entry of the next book. So, and then if you want to change an entry in this, you actually have to like quickly do the same computing power, and there's just so much computing power in the world that you could just never do that. In fact, I calculated it about a year ago that if Google wanted to point every single bit of computing hardware that they had on Earth, including every worker's mobile phone, and all their servers and everything, you wouldn't even add 1% hashing power to the network. That's how powerful this network is. So to rewrite that ledger, you have to have 51% of the entire network. And all of Google couldn't even get 1%. So it's a very, very secure network, and nobody owns it, and everybody owns it. It's a very obscure thing. And weirdly enough, it's kind of its own perpetual motion machine, because now that it's running, for the first time, we have a computer program algorithm paying humans to go and put more mining equipment and to create energy to pump into this network to secure it. So you've got an algorithm paying humans to secure it, be autonomous and amazing.
Yeah, and that's what created so many more new jobs in the world, and that's what already created so many new jobs in the world and new professions and new industries like decentralized finance. What do you think, in your opinion, what is lacking in our current stage of building fully decentralized finances?
So Bitcoin, I'm pretty sure everyone knows that Bitcoin is very volatile. What does that mean? That its price goes, yeah. And why does the price go crazy? The price goes crazy because it's in what's called a price discovery phase. So it's a new technology. Most new technologies go through this phase that, you invent some weird thing and you like bring it to market and everyone's like speculating on what this thing's really worth. So gold has had like 5,000 years of this price discovery time. So now it's fairly stable. Yeah, it's not super stable, but it's fairly stable compared to Bitcoin. Whereas Bitcoin, they're like, this could be the whole future of money 1 minute, and the next minute, China just banned Bitcoin. It's doomed, it's gloomed, and it's tanks down, right? So people are trying to figure out how safe it is, how secure it is, how usable it is, all of this stuff. And over the years, it'll start to hopefully become more stable. But we're very, very early on in this time. And so I think what's missing are algorithmic stable coins. We have these stable cryptocurrencies that are pegged to the dollar, but it's like old school finance has come in and gone, let's take over from this. But what they do is they say, hey, I've got $1 in my bank account and I'm going to issue a token that represents this dollar. So whenever you come back to me with this token, I promise to pay you $1. And wow, that sounds very much like a bank, because that's exactly what banking was, right? Original money, paper money, where does that come from? It comes from people used to carry around a lot of gold and silver. Well, silver, because that was for the people, gold was more for elites. And they carry on this heavy silver and they go to the markets and they go to get the watermelon and here, and put this big bag. It's very heavy. So what they would do is they would take their gold and silver to a vaulting facility. The vaulting facility would give them a receipt saying, you have 1,000 grams of silver in our vault. Here's the receipt. Thank you very much. You can bring this receipt back anytime and claim your gold. And eventually what people did is, instead of going back to the vault, they would actually just trade these receipts in the marketplace. And so that was very light. It was wonderful, until the bankers thought, well, the vault operators thought, wow, we could just print, not everybody's going to come back at once and take their gold. So we could just print more receipts. And we just start lending gold to people, but lending receipts and asking for interest for gold that doesn't exist. And they got so rich from this that they would have castles and estates that even, kings and queens couldn't afford. And then you had the French Revolution, where the people got wind of what was happening and they started cutting off bankers' heads, and the voting operator, whoa, can we stop cutting off the heads? This is too much. So I tell you what, you guys talking to the plebs, you guys let us continue doing this and we'll give you a little cut of it. So, and that's where interest payments come from. So this sounds very much like what's happening now with these stable coins, where you have this company saying, hey, we'll hold the dollar here and give you the token and you can do fun stuff on the internet. But how many tokens are they creating? Are they just creating tokens out of thin air and then buying rare numbers, like rare Bitcoins? Because there's only 21 million of these things, where there's infinite tokens that they can create. So it's a very dangerous, section of the whole cryptosphere. And so what we're creating with the Standard is a way to create a decentralized stablecoin, a mechanism where you have stability, but it's fully backed by gold and crypto. And this is another thing. So, excuse me.
How it's gonna work though if it's backed by crypto? Then, but crypto is very volatile. Like I understand the gold point, like, but how is it working with crypto?
Yeah, so in a little, like about 2 years after launching Vaultoro exchange, a young kid called Vitalik Buterin came up with this concept for Ethereum. And we were like, it'll never work, Vitalik, you're an idiot, this is foolish. And it works. It was amazing. This little whiz kid came out. I mean, it was a bunch of people, but so what Ethereum did was create this concept of a smart contract. Well, actually, it's an old cypherpunk's concept, but he actually created it. Now, a lot of people are like, what's a smart contract? Well, it's a fancy word for a computer program, really. The difference between a smart contract and a computer program is that a smart contract, a computer program runs on one single computer. You boot up your computer and you run it. The trouble is, if you put money into your computer and it has a virus on it, or a hacker's taken it, you don't know. You don't know if the output is correct. You don't know if a hacker's like said, send that money to me instead of the I don't know, the cleaner or whatever whatever the program's meant to pay. So what a smart contract is instead is thousands of computers running the same program, and 51% of the computers have to have the same output, because then a hacker would have to hack thousands of computers rather than the one. So now, instead of a computer program, it's a smart contract. And so what we're doing is allowing people, let's say with Bitcoin, to send Bitcoin into a smart contract, and it holds your Ethereum, let's say. And because let's say you put in 1,000 euros or dollars worth of Ethereum, what you can then say is, okay, this smart contract will let you withdraw or generate 50% of that value as a stable cryptocurrency. So inside this contract, this stuff's going up and down, as long as it doesn't drop below 50% of the value, in which case you get to keep the dollar and this thing gets liquidated and people buy it up. But if it stays above, you never have to sell your crypto, but you get to borrow money from yourself instead of a bank, and be able to buy a car. In fact, I bought a beautiful car for that, exactly in that way. I put Ethereum into a smart contract. It's called over collateralized, meaning the collateral that you put into the smart contract is more than the value you're taking out. And that difference between where you took out and how much extra you've got, that it can be as volatile as it wants in there, as long as it doesn't drop below that, because then other people have to come in and buy that, and there's a whole bunch of stuff that happens. But this is how self-lending happens. So we can remove banks out of the system while having stable cryptocurrencies backed by rare assets, provable, because everybody can see into these smart contracts. It's a total transparent ledger. And imagine now, there's $10 trillion worth of gold bullion around the world, 5 trillion which sit in private hands. And Victoria, I'm sorry, I go on and on. I don't let anyone else speak.
Great, I love it. I think you're going with a very good order of explaining things, and it works. That's
good.
Yeah, we will have to wrap up soon, but to finish your thought, I'm curious.
All right, I'll finish my thought.
Yeah.
A lot of people banter around the word billions, and a lot of people banter now around the word trillions. And I just want to give your listeners a bit of perspective of what those numbers mean, because I think people lose touch. They can't comprehend how large these numbers are. So a million, if you counted 1 million seconds, it would take you 11 days to count 1 million seconds. You'd be like, 1, 2, okay, you'd be there for 11 days, right? If you counted 1 billion seconds, you would be there for 32 years. So instead of 11 days, you're there for 32 years. If you counted 1 trillion seconds, you're there for 32,000 years.
God.
And so when like the national debt, we're going to print another $1 trillion in, like they're in gaga land. And so just going back to the gold thing, there's 10 trillion and 5 trillion gold. So what we're doing is allowing people to tokenize that gold into smart contracts, borrow stable things that are pegged to like the dollar, the euro, the yen, all sorts. And the good thing then is you're creating your own gold standard effectively. We don't need to wait for governments to create a gold standard. We can create our own. And that's what we're doing at the Standard.io.
And that, I think that's brilliant. This is such a great solution of, yeah, when it doesn't go down much, but we all know crypto, it's very volatile, but I feel like when there's Bitcoin and Ethereum, it's already kind of more, we know the value of it. It probably, I don't know if it's going to go down to zero, and nobody knows, but hopefully not. Hopefully,
If it goes anywhere near zero, I'll be buying.
Yeah, exactly. Well, thank you so much. It is such a great breakdown. I feel like I was just listening and I love how easy you can explain things that are, people are trying to explain in like 30 minutes what a smart contract or like what is a blockchain or all the stable coins idea. So thank you very much. That was very valuable. And how our audience can find you and where they can get on hand with your creations.
Thanks, Victoria. Yeah, you can just go to thestandard.io. You can find us at Vaultoro. That's Vault like a gold vault, and Oro, which is Spanish for gold, vaultoro.com. You can find me on Twitter at J Scigala, which is J and then Scigala, is my Twitter handle. And yeah, I talk all sorts of crazy stuff on there, and teach people the latest.
Awesome. Thank you very much. Thank you very much for coming on. And if you are listening or watching this on YouTube, just definitely give us a like or comment or any sorts of appreciations. We appreciate you very much. And stay tuned. I'll see you next week. Bye, Joshua, and bye, everybody.
Thank you. Bye.